Hi there, I am your host, Innocent. Welcome to Okwasi Media. Um, Today we are going to talk about inflation and especially inflation. We're going to look behind the data inflation for the year 2023, but specifically also to talk about inflation in December 2023. So yeah, let's get into it. So first and foremost, and for those of us who don't understand or rather do not understand, do not know what inflation is. So inflation is basically the general rise in prices across the board. So when there is the general rise of price level in the economy, that is what is referred to as inflation. And normally it is measured by percentage change, and normally also referred to a certain benchmark price, normally in a particular year. So say, and the particular year reference year is normally a year when prices were assumed to be stable. Yeah, so that is what inflation is. So, so let's take. What does inflation actually mean to your, into your income? So, when inflation basically means the decrease in the purchasing power of money. So if we say inflation is 3%, is 5%, is 10%, we are literally saying each shilling is 3% less powerful to procure uh, products and services from from suppliers and manufacturers and service providers as well. Yeah. So if you say it's 10%, we are saying each 100 shillings is actually 90 shillings in value, in actual value. And so inflation goes a long way to determine how households, individuals spend their money, because the higher the inflation, the lower the purchasing value of money, and likely the lower the capacity of individuals and households to procure basic goods and services as well as non-basic goods and services. So for 2023 in Tanzania in particular, our inflation data is quite really interesting. And so I want to walk you through the inflation data for 2023, and I'll share my screen for you to actually see what I am talking about. So our data for inflation data for 2023 basically shows that inflation rate was declining, has been declining, was declining across the year. So it started in the year at 4.9% in January 2023 and declined all the way to 3% in December 2023. That was a contrast to the inflation data in 2022, which basically was rising, through from January 2022 to December 2022. It was kind of opposite. So what actually happened and what were the contributing factors for the inflation Africa decline in 2023? Let's take a look at the data that we have that have been shared by the National Bureau of Statistics. So yeah, I'm gonna go directly to the inflation data in 2023. Yes, as you can see, as I mentioned, so we started the year at 4.9, and the inflation declined all the way to 3%. Nonetheless, the consumer price index actually rose to 113.34, which is basically 13.4% above that of the reference year, which is 2020. And therefore, generally, what we are saying is prices were 13% higher in 2023 compared to that of 2020. But they were they were basically 1.8% less compared to the end of 2022, because in December 2022 general prices were higher by 4.8, and in 2023 December they were higher by under 3%. So as you can see, so the data that we have, you can see the contributing data, or rather the data we have. So for all items, this is the headline inflation, 2023, January, that was up by 3.8% compared to 2022. From 2021, that was up by 4.3%. So that was a decline of 0.5% for 2022. And then, of course, food and non-alcohol drinks or beverage, you can see in 2023 it was up by 6.8% compared to 7.3% in 2022, and therefore there was a decline of about 0.5% as well. And all items less food and non-alcohol beverage, you can see it was 2.6 compared to 3.2% 2022. So the actual prices, the actual inflation rate for these products was actually 0.6% less. And the same goes for core items. And the core items, we are referring to products that stable in prices, and that includes among many products includes unprocessed foods, and you can see that the price was actually up 2.3% compared to 3% in 2022, and therefore that was down by 0.7%. And non-core inflation was 7.9% in 2023 compared to 8.2% in 2022. So basically, what does this data tell us? So you can see that while there was substantial increase, there was a general decline in inflation rate. You can see the biggest contributors of inflation basically this year were actually non-food, were actually non-core inflation items. So and you can see that also there was substantial contribution of inflation for 2023 by food and non-alcoholic drinks. And of course, we are aware that in one of the most products that saw substantial rise in terms of price was the oil prices. So if those of us who have an opportunity to go to the filling station have seen how the price of oil, the price of petroleum products, especially the most used ones, rose from 2,700 shillings to 3,000, almost 300 shillings. So that was a substantial increase of more than 10% in 1 year. So this is the data that we have, and basically what this data is telling us is that while inflation was substantially higher, or whatever, was on an increasing trend in 2022, it was the opposite trend in 2023, and the contributing factors includes among many things the stabilization and the price of food products in the markets, and therefore kind of cooled off the inflation that was due to other non-food products. So yeah, and so in terms of what is expected going forward, is what do we expect going forward now, given this data? So what we expect going forward, given this data, is that there is an imminent or rather potential increase in price, which might emanate from the increase in petroleum products prices, given the existing Middle East crisis, and that is likely to spill over across the entire Middle East region. And as we understand, the Middle East region is one of it's the biggest exporter of petroleum products. So this is one of the key data that we should be tracking as as investors, but also as consumers, because it's likely to have a substantial effect in how it's going to affect the general price levels of everything else in the economy, especially in economies where we are dependent on oil importation. So in terms of for those of us who are investing, we will want to keep on tracking the inflation data, and especially given the fact that the Bank of Tanzania has changed its monetary policy framework to interest rate based framework, which will be tied most likely almost always to the inflation rate. So investors will have to be tracking actual and expected inflation in the economy to kind of gauge how they are gonna make their investment, because that is gonna have an effect on an actual return or on actual return or inflation adjusted returns. So it's really very, very important going forward to actually be paying attention to the data that is normally shared by the National Bureau of Statistics, as well as the Bank of Tanzania and other agencies, to ensure that our investments incorporate the inflation that will be available or will be published in the market from time to time. Yeah, thank you very much. I hope this information has been very useful, and looking forward to meet you again. Don't forget to subscribe and share and like and comment on our YouTube channel, as well as our other social media handles. We love you.